from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the Delta variant delaying the return of workers to offices and drivers to ride-hailers. I'll speak to Uber CEO Dara Khosrowshahi and Lyft's John Zimmer about their plans to deal with a pandemic that's dragging on. Plus, NOVAVAX strikes a major deal to deliver 200 million COVID-19 vaccines to the EU. But there's a major catch. It's still not officially approved in Europe or the US. NOVAVAX CEO Stan ERCK joins us in an exclusive interview. And Robinhood's rocky road shares sink after a wild rally with multiple investors filing to sell. I'm talking to one analyst who's got a $45 price target and says, quote, "You don't YOLO this stock." We'll get to that in a moment, but first, let's get a look at the markets with Bloomberg's Kriti Gupta. And Robinhood aside, Kriti, despite more bad news about the Delta variant, we saw gains coming into the jobs report we're expecting Friday. What did you see?
Absolutely. A risk-on day in the markets, whether you're looking at stocks or bonds. You did actually see that show up in the market. The S&P 500 closing up 0.6%. Even the NASDAQ higher, a little bit of big tech outperformance, but not by a huge margin, Emily. The New York FANG index up only 0.8%. So once again, not a huge margin of outperformance. And even yields higher on the day. A little bit of money coming out of treasuries. It seemed like a risk-on day by all measures. And really, a lot of this is going to be positioning, like you said, ahead of the jobs report. You saw that tech outperformance showed just a little bit of a cautious tone. I want to show you what some of the other subsectors of tech did, though. I mean, let's take a look at Bitcoin. We were talking about risk sentiment. Bitcoin was extremely high. You had the semiconductor index and you had the NASDAQ biotech index in the red as well, though, today. So there is a little bit of a mixed picture when it comes to tech. Robinhood, though, is going to be the major story. Take a look at this 5-day chart. Well, 7 days, I should say, starting to drop 28% of a slide today. This coming after investors, some of those who were part of that early convertible bond sale back in February, selling up to 97 million shares. That, of course, over time, but really calling the kind of essentially the top of the sale, especially after that intraday surge of 82% yesterday. Is this volatility going to stick around? That's the real question when it comes to Robinhood and, of course, the broader markets, Emily.
All right, a lot of questions remain. Our Kriti Gupta, thanks so much, Kriti, for that update. Meantime, it's a tale of two ride-hailing apps, Uber and Lyft. And as the world begins to open up, albeit hesitantly, the post-pandemic bottom lines of the two businesses couldn't be further apart. Uber's losses widening as it expands its offerings to grow market share. But for Lyft, they pulled off a surprise for investors this quarter by reporting its first ever adjusted profit, ahead of schedule. For more now, I'm joined by Lyft President John Zimmer. So, John, how did you manage to do this even with the pandemic dragging on?
Yeah, the team is executing incredibly well. We just built back a better business that allowed drivers to earn all-time highs and to have our first adjusted EBITDA profit. So we're quite happy with the results.
Now, despite that, it's still hard to get drivers on the road. And I have to tell you, when I've tried to call Lyft a few times, I don't get matched with a driver. What are you doing to combat driver supply issues?
Yeah, driver supply is improving quarter over quarter. We had 50% more new drivers than in the past quarter. That said, we are coming out of a pandemic. We have a massive amount of demand coming back even faster than we expected. And so the market is getting back into balance. It will take a little bit of the time, but it is improving.
But are we coming out of it? I mean, with the Delta variant speeding up, renewed lockdowns, new mask mandates across the country, how do you expect that to impact business? How do you expect that to impact the next few weeks? I mean, are you already seeing a dent in demand or supply in the last, few days and weeks?
Well, what we've said is that July was a further increase in rider demand. And as I mentioned, quarter over quarter, we had improvements in bringing more drivers onto the platform. Now we need to do that as safe as possible. We've kept the mask mandate in place. We never took that away, which was a good call by the team. And yes, as more people get vaccinated, we are seeing more people want to get out and want to see loved ones. And, we're still not anywhere near where we were prior to the pandemic. but it's all moving in the right direction.
Now, I spoke to Dara Khosrowshahi earlier today. You know, they're having these driver supply issues as well. They haven't hit that profitability milestone, but he promises it's going to happen later this year. And he says if the outbreak continues or gets worse, they have a backup plan, and that is Uber Eats. Take a listen to what he has to say.
We have the hedge, right? So if mobility gets hit because of Delta, we see the delivery business growing. And we've also stated that the delivery business is going to get EBITDA profitable by Q4 as well. So we think we're reasonably protected.
Lyft, of course, doesn't have a Lyft Eats. So, you know, are you in a potentially weaker position if the pandemic continues because you don't have another business to rely on?
No, look, we are in this for the long term. We've been at this for many years, building out what we see as the biggest opportunity in consumer transportation. We don't need to hedge anything. We just hit adjusted EBITDA profitability in some of the hardest conditions. We have a great business, and we're going to be able to, with that focus on consumer transportation, deliver a better service for drivers and riders than anyone else. We've executed that on over year, as you've seen, against the odds when people counted us out, when people said we would get crushed, and when people said we couldn't be profitable. And so we're going to continue to focus on this massive business opportunity and take care of our drivers and riders.
Now, Uber is planning to tamp down its driver incentives in order to hit that profitability milestone. Dara seems confident they can do that and still be profitable. You guys are amping up your driver incentives, and I wonder if you see an opportunity there to win some drivers who might be used to focusing on Lyft to get them used to focusing on Uber and get them over to Lyft. What's the hard sell?
No hard sell. It's pretty straightforward. We're really happy with our strategy. Again, we hit adjusted EBITDA profitability. We had a large amount of driver incentives in the market in Q2. We're going to continue to do that in Q3. It's the right thing to do long term. We're not playing a 1 month game, a quarterly game. We're playing the long term, and quarter over quarter, we are beating expectations. Whatever the market is saying is possible for us, we're surpassing. We're going to keep doing that because it's right for our drivers and riders in the long term.
Now, John, over the last 18 months, I believe you've been joining us from home, but it looks like you're in the office today. How are you thinking about your return to work plans? We're seeing a lot of delays. Amazon just pushed back their return to work plan until January. Where do you stand right now?
Yeah, so we now have a vaccine requirement for those in the office. I feel much better here in the office doing these interviews versus when my daughters were running upstairs. It makes it a little more relaxing. But overall, we're starting to see people come back following the vaccines. We've allowed people to take up to early next year. There's no requirement for them to come back prior to that.
Now, there's still no vaccine mandate for drivers. And, Dara said they're not likely to do that. They think the government should be the one to mandate that. I spoke to the CEO of Instacart who said they're debating that for shoppers, but it could certainly impact supply issues. I mean, are you at all considering mandating that drivers get vaccinated to improve safety in Lyfts themselves, but also to help with the lack of vaccination problem that's happening across this country?
Yeah, we'll look at every option. What we feel great about is that there is a mask mandate in place for drivers and riders in all our rides. We're recommending and asking drivers and riders to have the windows down. That's different in an office environment. In this conference room, I can't operate these windows. And so there'll be different requirements for different scenarios, but I feel very good about the safety of Lyft rides. I've taken some myself, also did some Lyft driving a few months back as well.
And how was that?
It was great. I was comparing Lyft driving to delivery services, and it was just really nice to see people again and interact and keep learning from the drivers and riders on how we can do better.
What did you learn? I mean, what are you learning? What have you learned over the year and a half that you guys think that you can carry forward?
I mean, over the last year and a half, what we've learned is that the investments we're making in the long term in the marketplace, the technology, the things that might not be as shiny objects to announce or launch, but just kind of grinding it out underneath the hood to improve our routing, our mapping, is paying off. It's why we can demonstrate this adjusted EBITDA profit while having higher driver earnings, while being in the midst of coming out of a pandemic and having the market not perfectly in balance. And so focus pays off. We're just going to keep our heads down and keep doing that.
All right. Lyft President John Zimmer, always good to have you with us, John. Thanks so much for joining us today from the office. Okay, coming up, we're going to have more with my conversation from Uber CEO Dara Khosrowshahi, including how they're working to get more drivers on the road, how Uber Eats is faring in parts of the world where constant shutdowns are becoming the norm. That is next. This is Bloomberg. As we mentioned earlier in the show, unlike rival Lyft, Uber is yet to turn a profit as the company posted a wider loss in the second quarter compared to the prior period. Uber spending heavily to lure back drivers and also on ways to expand the business. Well beyond ride-hailing, I spoke to Uber CEO Dara Khosrowshahi earlier about the game plan as Delta rages on and his longer-term vision for two Ubers, Rides and Eats. Take a listen.
Overall, we're really happy with the results. The top line beat. We knew that we needed to get more drivers out driving and couriers delivering because the demand was growing so quickly. So we leaned in to really increase courier supply and driver supply. And we added 420,000 couriers and drivers during the quarter between kind of June and February. Added another 110,000 with Postmates couriers as well. So we're really getting the earner force out there, and it's resulted in top line volumes that are very, very strong. And it's putting us on a path where Q3 losses are going to come down significantly. In Q4, we're going to hit EBITDA profitability as well. As far as a Delta goes, it's difficult to tell what the effect is, except for markets that have closed down. So Sydney, for example, has really shut down. The mobility business comes down, but our delivery business grows very significantly. And we net out, for example, in Sydney at 30% ahead of 19 volume. So overall, we have this great hedge between mobility and delivery. But when we look at city by city, you look at a New York, you look at a Paris, you look at an LA, et cetera, it's very hard to discern any patterns as far as Delta goes. We'll be watching very closely. We're
going to talk about Eats in a sec, but in terms of ride-hailing, look, I've taken about 10 Ubers in the last month after not taking any for a year and a half. Sometimes it's there in 2 minutes, sometimes it's there in 20 minutes, sometimes, you're welcome, sometimes I get canceled on. So when do you foresee a more consistent balance of supply and demand?
So Emily, this is exactly why we really leaned in Q2. We wanted to get the Uber service back to predictable prices that you can expect, ETAs that you can expect. And ETAs and prices are coming back to historical levels. In states like Texas, Florida, et cetera, they're getting there faster. New York is in better shape. So it's really location by location, but we are consistently seeing ETAs and prices come down. I think that by September, October, November, you're going to get that magical Uber experience that you've always been used to. And we're leaning as a company to get there as quickly as possible.
And you're spending a lot to get drivers back out there, $250 million in the last quarter, but you've said you can taper incentives through the rest of the year. Lyft says they're amping up their incentives. So what makes you so confident you can win drivers back if you whittle yours down?
Well, because we're seeing the drivers come back. 420,000 came back in just a couple of months. And what we're seeing in July is, we started with incentives to really get drivers out there, but we're moving from essentially incentives to improving our onboarding processing. We reduced onboarding time by 90% with a new, much smoother onboarding process. We're reaching out to drivers who had stopped driving to resurrect them to get back on the road. That has been enormously successful as well. So in July, for example, we were able to taper incentives. We're targeting them much more specifically in the cities where we needed, when we needed. And at the same time, new drivers who signed up in July were up 30% month on month from June. So we're seeing the numbers, they're really encouraging, and we're not assuming that we're going to get any better, even though based on our technology and the systems that we have in place, we do think we can get more targeted and better in terms of onboarding drivers and couriers.
And obviously, I know profitability, really important milestone. You've promised you're still going to hit that before the end of the year. But what are the chances that Delta could shake that up too? What are the chances you don't hit that milestone?
You know, the good news for us is that we have the hedge, right? So if mobility gets hit because of Delta, we see the delivery business growing. And we've also stated that the delivery business is going to get EBITDA profitable by Q4 as well. So we think we're reasonably protected. Obviously, it's a very, very uncertain environment, but we're the only company out there that's leading in mobility on a global basis outside of China, that's leading in delivery on a global basis outside of China. These businesses are now strengthening each other. And actually, customers who use both mobility and delivery account for nearly 50% of our gross bookings on a global basis. So if you stay home, you're going to use Eats. If you want to get out to a restaurant, you're going to use classic Uber. That is a strength and the unique strength that we bring.
Now, last time we spoke, you talked about how you've basically built another Uber. There's Uber ride sharing and Uber Eats. When you look 5 years out, which Uber is bigger? You're obviously expanding into grocery, you're expanding into instant delivery. But how do are the two Ubers still twins or something else?
Emily, you're making me choose between my kids. I'd much rather have them compete. We've got a team that's growing our Uber business. We've got a team that's growing our Eats business. They're going to compete with each other. And we'll see who wins. I do think that the delivery total addressable market, we've expanded delivery from just restaurants now to grocery. We're getting into alcohol delivery. We're delivering for Apple. We'll deliver an iPhone to your home. So the total addressable market for the delivery business is probably bigger. But as it relates to Uber, we're getting into transit. We're wiring up taxi cabs, two-wheelers, three-wheelers. So it's going to be a great competition, and I'm going to be pushing both of them to grow as fast as possible.
You are doubling down on freight. Bought Transplace last month, $2.25 billion. That makes software that helps companies manage their supply chains, manage logistics. What's the vision to own that? What's the vision to own supply and logistics?
Well, I think you hear all the time now how supply chain has become a problem for a lot of companies and is becoming a much more important part of how they operate. 50% of Uber Freight's customers are actually consumer packaged goods makers, brands, et cetera. The same brands that we're delivering for, Corner Shop into your home. So we think with Transplace, we're going to be helping these brands actually manage their supply chain. With Uber Freight, we are connecting them to the shippers that can get the food or the water or the sodas or the beer from the warehouse to the store. And with Eats, we can get that soda or food from the store to the home. There's no one else that is building this kind of end-to-end logistics infrastructure powered by machine learning that understands where you are, when you are, and can make that chain the most efficient. That's really what we're building. Now, and the Transplace team is just dynamite. So we would be very happy to have them as part of the Uber family.
You've pushed back your return to work. You're mandating vaccines for your corporate employees. You did have a COVID exposure at a board meeting. And look, the Delta is real. It is scary. You're not mandating vaccines for drivers. How are you thinking about this? Instacart CEO just told me they're debating it for shoppers. Is it at all on the table?
These are subjects that we talk about all the time. I do think that it's different when you're talking about employees or spending 8 hours a day in an office. And remember, for us, the big issue is if we mandate it for drivers, I think we'd have to mandate it for riders as well. And when you have a company that has essentially 100 million riders and drivers using the service every single month, I don't think that to have a company have the power to mandate vaccinations over 100 million people who are moving around is probably the right call. So we are going to work with governments based on government mandates, local mandates. We're going to follow them. And at the same time, we're pushing very, very hard to help drivers, couriers, riders get vaccinated, often providing vaccinations for free or transportation to vaccinations for free. So we're absolutely doing our part.
We are coming up on your 4-year Uberversary, so congratulations on that. The New York Times recently called you the dad of Silicon Valley, a stark contrast to your predecessor. As you look out on the next 4 years, from a cultural perspective, what are your priorities, especially when it comes to diversity and building, a more inclusive workforce? What's the company and the culture that you want to build?
Well, I think the kind of company that we want to build are full of entrepreneurs who want to have impact, and impact in the broadest way, but in real life, right? The service that we are building essentially will allow people to go anywhere, get anything into their homes, and millions of people earn. That comes with a lot of responsibility. So we want entrepreneurs who want to build, but they want to build responsibly. And diversity is a big part of that. We need to have that diversity in our workforce, because we certainly have that diversity in our earner base and our courier base. And ultimately, that is going to help us build a better product. But it's all about impact in the real world. And we got a lot of people who are incredibly excited to build our Go Get vision.
Dara Khosrowshahi there, the CEO of Uber. Meantime, the company he used to work for, Expedia, is out with results after the bell. Shares falling after hours after CEO Peter Kern warned about uncertainty in the travel industry due to the many COVID variants and said the road to full travel recovery still bumpy until more of the world is vaccinated. That overshadowed better than expected revenue and gross bookings for the quarter. We'll be back with more of Bloomberg Technology after this quick break. This is Bloomberg. In China, TikTok owner ByteDance has laid off hundreds of employees working on its edtech products. The social media giant shutting down a significant part of its online education businesses to comply with Beijing's new regulatory regime. The curbs on the after-school tutoring industry also include a ban on profits. And coming up, NOVAVAX is holding submission for U.S. clearance of its COVID vaccine after striking a big deal to supply vaccines to the EU. I'll speak exclusively with NOVAVAX CEO Stanley ERCK coming up next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. As cases of COVID-19 rise around the world, companies are continuing to rethink and readjust their return to work plans. Amazon is the latest tech company to further delay its opening date. The e-commerce giant announcing corporate employees won't have to return to the office regularly until January. It had previously said office workers would restart in September. Joining me now for more, our Bloomberg News healthcare reporter, Riley Griffin. Riley, obviously so much changing as we speak. With Amazon, is this the case of a company being too conservative or cautious, or are we in for a rough few months?
We know that the companies are closely following CDC data, and the data is getting worse as we speak. Forecasts of new reported COVID-19 cases over the next 4 weeks, for example, are predicted to rise 350,000 to 1.8 million by the end of the month. When you look at hospitalizations as well, which are mostly cropping up in those unvaccinated pockets of America, new hospital admissions over the next 4 weeks look like they're jumping by 6 to 7,000, all the way to 24,000. So the data doesn't look good. And what we know seasonally, and we can just look back to last year to tell the tale, is typically when people shift away from that summer season into the fall, start to go indoors, the temperatures get colder, cases seem to rise. So what we need to focus now on is closing the gap, getting the rest of the country vaccinated so that the virus stops mutating and being transmitted.
Meantime, we're moving beyond 6 months from when vaccines first started being available. You've got U.S. health officials who still aren't saying that boosters are necessary, but People like my mom, people of a certain age and health profile want to know if they need them. Other countries are ordering enough doses for boosters. When are we going to get clarity on this in the United States?
I think we're going to see U.S. health officials shift the tone and tenor about boosters quite soon. We heard from Peter Marks, an FDA official, earlier this week, who said that they might come out with a strategy in the next 1 to 2 months. You know, if that's a separate kind of comment from that which we're seeing from Pfizer and Moderna, both of which have been advocating for boosters nearer term. Moderna just today, when it reported its quarterly earnings, suggested that we should get going and boosting this very fall. Now, there was good news tucked into that earnings report. Moderna efficacy at the 6-month mark only waned by 1 percentage point, from 94% effectiveness against symptomatic COVID to 93%. So for now, we can remain comfortable, but exactly what you're saying, Emily, the first that are going to get that boost are most likely to be older Americans and the immunocompromised.
Now, of course, there are children, many of whom still can't get vaccinated. Delta is surging just as kids are supposed to start returning to schools. And here in California, we just found out that teachers won't have a vaccine mandate for public schools, which is scary. When will a vaccine be available for children 12 and under?
For children 12 and under, we are waiting on data that's being collected in real time right now. Pfizer has said that it expects that data for its under 12 population could come as soon as September and some more in October. Add that to Anthony Fauci's comments, who suggest that we should see all children eligible to get a vaccination within the first quarter of next year. And things are looking pretty good on the trajectory in terms of research. Now, to the mandate question, uptake is going to be important. And we're already seeing in the 12 to 15 cohort and 12 to 17 cohort that fewer than half of those eligible Americans in the school setting are actually getting their first dose. And a lot of this hesitancy seems to map onto their parents as well and fall across red and blue lines. So the question isn't just going to be, when will we get the shot? It will be, how are we going to ensure there's uptake in the school setting? And as you said it, that's going to come down to mandates.
All right, so much continuing to unfold as we speak. Riley Griffin, our Bloomberg News healthcare reporter, really appreciate your reporting on this and your analysis. Continuing on this topic, biotech company NOVAVAX has just signed a deal with the EU for 200 million doses of the COVID-19 vaccine. But here in the U.S., the company is still delaying submission for its vaccine clearance. We're going to speak with the CEO of NOVAVAX, Dan ERCK, later this hour. We'll have more of Bloomberg Technology after this quick break. Biotech company NOVAVAX has just signed a major deal with the EU for 200 million doses of its COVID-19 vaccine. But there's a catch. The company's still waiting on official approval from the EU to distribute this vaccine. For more, I want to bring in NOVAVAX CEO Stan ERCK. Stan, obviously this is a huge development, but there is an if hanging over this. You need approval from the European Medicines Agency. What is the status of that?
No, it's in fact what goes alongside today's announcement. We had three major announcements. One was, of course, the signing of the agreement with the EU, which says that there's continued very significant demand for our type of product. The second is that we have data that just came out that was announced today that shows that our vaccine works really well and it could be very effective against the variants that we all hear about now, and that those data were prepared today. And the third, and these all fit together very well, is that we've now filed our first regulatory filing for approval of the vaccine, for authorization of the vaccine. We filed it first in India and in Indonesia and the Philippines, which a couple things. One is India is the country where we're working with our partner, and they know that process really, have been working with the DCGI, the FDA of the NDA, very closely, and that's why we got an early filing there. Indonesia and Philippines are desperate for a vaccine, and they're following in and we filed with them too. So this is just a first filing. We will be filing with the European Medicines Authority in weeks, and with MHRA in the UK, and ultimately with the FDA. The expectation is the MHRA will be in September. We're in August now, and EMA and the FDA will follow. So I think that this is just the first step of cascading number of filings, of regulatory filings.
So let's focus on the places where you have submitted those filings. When do you believe the vaccine will be available, and where will it be available first?
Yeah. So what's going to be available is we are stockpiling vaccine now, and we're stockpiling many tens of millions of doses, so that when the regulatory agencies do approve, that we are able to ship at almost a moment's notice. So that's a big deal. When the sequence of approvals will come presumably from one or more of the three agencies that we've just filed with. We're not in the business of predicting how quickly the regulatory agencies will approve, but I can give you insight that although we've just submitted the data within the last days, we've had meetings with a substantial number of people in these regulatory agencies going over all the questions that you would expect to be asked, meaning that they've begun the intense review process. So I can't predict when it's going to be reviewed or when it's going to be approved, but they're doing all the things we would want to have early approval.
Now, Novavax and really so many manufacturers have been dealing with supply chain issues. I'm curious what your manufacturing goals are now that you are in this position.
No, that's a great question, because we've talked throughout the year about the difficulty of the tasks that we're attempting, which is to get large-scale production in about 8 facilities globally, and it's really a challenge. It has been a challenge, and in part because we can't get some of the raw materials. Simple things like filters that we filter our product with, media which we use to feed the cells that we grow them in, have been in globally in short supply. That is becoming in the past. I think all the suppliers have done really well in scaling up their production capacity to meet the pandemic demand. And right now we're able to produce in all of our facilities. So I think starting in the third quarter, we're able to get to these levels of production that we're predicting. We have, for the first time, we have kept with the forecast that we made 90 days ago, which is we'll be at a rate of 100 million doses a month starting by the end of September, and 150 million doses per month by the end of December. And so, that's an expectation of a couple billion doses for next year. And so I think we've climbed that mountain.
Now, one huge advantage of your vaccine is that it can be stored in a standard refrigerator. Talk to us a little bit about the technology behind the vaccine. How does it fit in relative to the mRNA vaccines like Moderna and Pfizer that we're more familiar with at this point?
Right, you're right, and it's an important advantage. The stability we make. The product is a protein that forms as I say, it's a particle. It forms a trimer of a protein. It's very stable in the formulation that we can make it. So it's certainly stable at what's called 2 to 8 degrees, which is standard refrigeration. It's probably stable at room temperature for some amount of time, and it makes the distribution process very easy. Globally, we've been doing vaccines for a long time that require refrigeration. So there is a global cold chain, so that doesn't have to be repeated. The problem with the RNA vaccines right now is they do require dry ice and freezing, and it's a problem that those manufacturers are trying to work around. But for now, it creates a disadvantage for a frozen vaccine.
Meantime, obviously, the work you're doing is incredibly important, and you, as a chief executive, are dealing with COVID, how to deal with COVID among your own staff. We're seeing all of these companies delay their return to work plans. Have you changed your return to work plans? Are you mandating vaccines for your own employees?
Yeah, so all of our employees have been vaccinated. We're a vaccine company, and so that's an important point. We are dealing with the issue. I think the whole world is changing and trying to figure out how they're going to deal with bringing employees back on board again. So we're working with it. We, like others, have in the lab, you don't have any choice. You have to have employees coming to work in the lab. Other activities can be done from home. I miss seeing the employees, so I prefer to have employees come into the office. But we're working through that like many companies are.
Now, shares took off after you struck this deal with the EU. Talk to us about the longer-term business plan. Does Novavax plan to stay independent?
Yeah, I think we've been building an organization. This is in let's say the first quarter of last year, we had roughly 90 or 100 people in the company in the U.S. and another 50 in Sweden. We now have over 1,000 employees. And at first, those employees were in the analytical and manufacturing side and quality side and building that up. But more recently, we've been building up a whole infrastructure of commercial. The good news is that our first deliveries, it's not like bringing on a new drug where you have to have thousands of sales reps. We're going to be shipping to central warehouses for government distribution of the vaccine. And so we have time to build up a more natural sales force that can market a seasonal annual flu vaccine and a COVID vaccine. Hopefully they'll be together. So our plan, we know that there's a long-term plan for COVID. It's going to be around for a long time. And we think we have the vaccine of choice when it turns to a commercial product. And so that's our plan is to be the lead COVID vaccine.
All right. Thanks so much for sharing those plans with us. Dan Erck, Novavax CEO. Big development for you today. Appreciate you stopping by. Tomorrow, we're going to be speaking with the co-founder of another vaccine maker, Moderna. Noubar Afeyan will join us to talk about vaccine efficacy, boosters, and the status of its vaccine for kids. Make sure you tune in. Meantime, Robinhood has had quite the week. The trading platform stock dropped as much as 27% after investors proposed to sell up to almost 98 million shares over time. Investors have been taken on a wild ride over the last couple of days after the company popped 50% Wednesday. For more, I want to bring in Wolfe Research Managing Director Stephen Chubak, who has a rating equivalent to a hold and a $45 price target. So just a few days into this, Steve, and quite a ride. Would you say Robinhood is officially a meme stock now?
Yes, I think that's certainly a fair assessment at this point, just given some of the price action that we saw this week. So one of the interesting things that we've looked at, our quant team actually puts together this great screen where they pour through all the Reddit feeds and try to gauge where is there the most price action, where is there just the most general activity that's percolating. And you could see that Robinhood is firmly #1 over the last couple of sessions, which really speaks to a lot of the volatility that we've seen here.
Now, your latest note's big takeaway is do not YOLO this stock, which of course means you only live once. What do you mean by that?
So the idea being that you don't want to lose your shirt by being long or short the stock here, right? Ultimately, we're going to make a call on the fundamentals. And there's a wide range of potential valuation outcomes when we look at Robinhood. There's a bull case where we can underwrite a share price that's north of $100. And there's a bear case where if the regulation proves to be much tougher on payment for order flow, our expectation is that this stock could trade down as low as $15. And so we're shaking out somewhere in between that. Really the key takeaway for us when we just look at the risk reward is you don't want to lose your shirt if you're going to get short, with the view that the meme mania could certainly take this stock higher. And on the flip side, if you get overweight on the hopes of this fintech craze and the potential for Robinhood to go from a brokerage shop to something much bigger than that, the ultimate money app is really their ambition, when you hear the founder speak. And so from my perspective, you just have to be on the sidelines. And nothing was more telling than that, than 98 million shares that were registered. And for context, right, that's there's only 55 million of shares that are in the float, but there's going to be a lot more technical selling pressure as more shares start to hit the market. So you had 98 million that were registered today. there's going to be another 98 million that's performance-based. And then after that, December 1st, there's going to be 575 million shares that are no longer going to be subject to lockup. So I think people also have to be mindful of some of those technical selling pressures, as they decide whether they want to be involved for the next couple of months or not.
So let's talk about what the founder has said. I spoke to Vlad Tenev last week. I asked him if he was worried about becoming a meme stock target himself. He wasn't. Take a listen.
We're not really thinking again about anything that happens in the market, especially in the short term. The goal is to keep making great products, to keep improving the service, and keep growing with our customers. And I think we've seen certainly finance become more important and the retail investor become much more important within investing. And that's something we think will continue.
So last quick question, Steve. Is it a risk, within the company, these wild swings happening in the market on the outside? Could that become a distraction on the inside? Could that, impact the actual fundamentals and the work they're trying to do?
Yeah, I mean, look, ultimately, that really depends on the employees at the firm. And I think the hope or expectation is that they're not going to get distracted by it. I think the bigger lingering question is whether institutional investors are going to be comfortable taking a position in Robinhood, given all of the meme mania and the sheer amount of volatility that we're seeing in the marketplace today. That is simply something that most of the investors on the institutional side that we speak with are simply not comfortable with. So my hope or expectation is that as the float grows larger, as it becomes a little bit less expensive to borrow the stocks and the stock to ultimately short it, that you're going to start to see less volatility. You'll begin to see that abate. And once that institutional investor comfort starts to come through, that's when I think the stock's going to be trading better and ultimately will move lower down that meme stock ranking.
Okay. Steve Chubak, Wolf Research Analyst, thanks so much for joining us. We will stick with this wild ride and see where it takes us. All right, plenty more ahead as we head to break. Longtime star of The Daily Show, Jon Stewart, is embarking on a new streaming career with a deal to host a current affairs program for Apple TV+. The multi-year accord comes with a first-look agreement for other potential content from Stewart on that platform. Big hire. This is Bloomberg. President Biden unveils an ambitious goal for half of all vehicles sold in the U.S. to be capable of emissions-free driving by 2030. For more, I want to bring in Bloomberg's Anne-Marie Horton, who was at the event at the White House today. Talk to us about the president's plan, Anne-Marie, and how significant this is.
Very significant considering how ambitious it is. But given that it's an executive order, it can really only go so far, Emily, in terms of things like fuel economy requirements. Those are the things the president has this jurisdiction over. But what automakers say, for this to be able to get done, what do you need if you need a good EV? Strong batteries and long batteries, as well as charging stations. And right now in the United States, there's only about 40,000 something charging stations. So really where that money is going to come from is from Congress. And already we see in this bipartisan infrastructure agreement that's being debated right now in the Senate, it calls for $7.5 billion just to go to charging stations. So in lockstep, potentially we can get there, but it's quite an ambitious goal.
So what's been the reaction to this goal and, whether or not we can make it?
Well, one thing I would like to say, also considering we are on the technology show, is that, Emily, someone you cover a lot, Elon Musk, was not at this event and was tweeting at the fact that he felt like Tesla, I guess, was a bit snubbed. He found it odd that they weren't there. And one thing who was there, though, is, of course, some of these big power players from Detroit and the union workers. And the president was introduced by a union worker official. And why that was so interesting to me as well is because there is something in Congress being debated right now, something that the Senate wants to bring forward about potentially consumer rebates to buying EVs. And some of them, and why it's ambitious and potentially could get there, is that you can get an even bigger rebate if this was to become legislation, if you were to buy a car from an auto company that used union workers. So something really to look out for.
So what are next steps?
The next step now is that all of these auto companies, we've already heard from GM, Ford, already have their own ambitions. The big step is going to be what gets done in terms of legislation. So if Biden has this executive order and all these car companies agree on fuel efficiency and fuel economy initiatives, that's great. But how do you actually enroll like a charging network across the United States? And that we already seen being done in Congress.
Okay.
The Biden administration wanted $15 billion, though. He's only getting $7.5 billion. Potentially, we could see more of these initiatives come from the Democrat-only budget reconciliation package.
All right, Emery Horton for us in D.C. Thanks so much for that update. That does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Dropbox CEO Drew Houston, Glenn Kelman, the CEO of Redfin, Zynga CEO Frank Gibeau. Great show tomorrow. You don't want to miss it. I'm Emily Chang in San Francisco. This is Bloomberg.